Hi, it's Sean Haynes with Agri CFO and the Ag Center. I just want to say thanks for listening to our weekly commentary again. Got their standard information that we always got, but anything that you guys want to see going forward or like to add to it, we'll definitely listen to that. We've been taking that into consideration with adding these new vineyard report we've got coming up, and now talking to folks about avocado and citrus markets as well. So I like the feedback, like the input. Hopefully you guys find this information useful. And again, we're always looking for input on your side to make it even more useful for you. So enjoy. So let's start this week off with California beef markets. Beef markets moved up another nickel or so per pound on most of the animals. 4.5 weight cattle on the forward curve running around about 280 average out for the rest of the year. Heifers are about 15 cents, 20 cents off of that. Cash market for those same cattle, 450 weights, are in the 315 to up to even 330 range, depending on quality of cattle. It's kind of all-time highs for cash. That value for cash on these beef on dairy crosses is pushing the dairy value up as well. Calves are going to 625 per calf on the dairy side right now for beef on dairy crosses. Holstein calves have pushed up to 300, 325. So it's really kind of pushing along. It's also been helped a little bit. These feed costs have come off a little bit with corn coming below $5 a bushel. Hay's been a little bit cheaper. So kind of got all these things pointing to, the ability to feed these cows a little cheaper. If you look at the cattle index and say, hey, how much are stockyards making on these animals, even with the current prices and current forward feed, they're still looking to make a couple $100 a head on the back end when they finish these cattle and send it to processors. On the processor side, a little bit of a different story. They're kind of getting pushed back from the retail segment. Box beef prices are down to 301 on the choice side. Meat volumes are down, so it's kind of helping with the supply side, but the consumer's pushing back a little bit. You've got all-time high beef prices, like ground beef's at $5.30 per pound. It's the highest it's ever been. So you kind of see where that's going to end up. And then you still have that kind of Mexican standoff, for lack of a better word, going off between the packers and the feed yards, and both of them kind of waiting to see who's going to budge on prices with this Labor Day weekend coming up. Last but not least, we're going to watch these numbers come into the fall pretty hard, see if these guys out in the Midwest and out here in California as well with these native cattle actually hold back heifers and slow down calling it cows to expand the herd. With pricing like it is, and the fact that something like 42% of the ground that beef animals are on in the U.S. being kind of some drought areas, you wonder if it's grass for that. So it's kind of competing pressures. You've got price saying, hey, let's expand our herd and take advantage of this over time. But you've also got the availability of feed kind of saying, hey, no, go ahead and sell them off and take some profit. So we're going to watch those numbers really close to see what the forward curve for availability goes. If that availability of cattle doesn't kind of show up, I think the long side risk for next year is actually watching some of these feed yards maybe shut down and consolidate, because they're just not going to be able to place animals and keep themselves full. So we'll have to watch that pretty close. But continues to be a bright spot in California agriculture with beef. Let's get into dairy. Dairy markets continue to push up a little bit on the long curve when you're looking at prices. Current class 3 is about $17.20, which is about $2 almost, $3 per hundredweight more than last month, which is a good move. Class 4 is kind of staying solid, so cheese prices really haven't come off as that much. Actually, they come up and kind of holding. Butter prices are holding. Blend price for July checks received in August here is going to be tough, though. That's kind of looking like it's going to settle just under $15 per hundredweight without your components. So a lot of guys are going to suffer pretty hard losses this month, but it looks up coming into August with $17.53 milk right now, and then kind of pushing up into the mid-18 range over the next 3 or 4 months after that, which most guys should be able to make a profit once these feed costs resettle. Beef on dairy cross calves still strong, like $625 per head. Bull calves on the Holstein side have pushed up as well to $300 per head, $325. Just strong demand for beef markets continuing, which is pushing call value for cattle up as well. Looking 90 cents to $1.23, and that's pushed up at a nickel on pound on average this week. Strong demand there. And then demand for dairy heifers has been okay. You're looking at $1,525 to $1,900 per head on replacement heifers that are coming fresh. Still pretty strong. The beef side kind of makes that a little bit easier. Rising tide floats all boats. And then feed side, feed continues to come off. You're looking at feed contracts on new crop hulls about the 110 to 125 range. North Valley, it's about $10 per ton more on the South Valley for hulls. Dry cow hay's dropped down to that $200 range. There's just a lot of it out there. And if you want to feed some crappy hay, you can get down to the 180 range, 170 range. Milk cow hay still strong in the mid 300 range, still $100 off of last year, but it's been holding up. There's not a lot of availability there in total. Silage crops look good. Quality looks good. Looks like harvest is going to be right. No inclement weather to really worry about. These degree days are helping kind of get it mature. So once that comes off, looks like those prices on the corn silage are going to be a lot lower than last year, $23 per hundredweight less. So I think, again, these feed prices are going to come in September, October, reset. You've got an inclining milk price coming after that with this kind of carry through with all these beef money as well on these calves. I think, between all those things, we should kind of get right on the ship, right the ship a little bit toward the end of the year and actually be back in the profitability range, or at least be cash flowing, which is going to make people feel a lot better. I don't know what that's going to do as far as slowing down the amount of exits from the industry or the heavy culling that's been going on, because beef prices remain high. It really makes it lucrative to sell these extra cattle off and maybe even sell some extra heifers off as well, which is pushing into next year, looking at a small heifer hole. I'm still kind of a big believer that we're not going to calve enough heifers this next year to kind of meet up with demand if prices signal to increase production again. So California dairy is looking up finally for once. We'll have to see if that kind of comes true. And now let's talk about crops here in California. Still in full swing for the stone fruit season, which is peaches, nectarines, plums, what have you. Prices continue to hold steady. Nectarines and peaches still in the $29 to $30 per box range or bin range. Same thing with plums. Watermelons have picked up a little bit, and they're $175 to $203 for a 24-inch bin, depending on how many watermelons you fit in that bin. But markets continue to stay strong, at least be held up. Tomato crops looking good. It's trying to finish out with all these degree days. The only major worry folks are got right now is not really the quality of the crop or the size of the crop. I think that all looks good from what I've been seeing, but just getting it in on time. October 31st is a cutoff date for the insurance, and once you get past that, you kind of lose your ability to cover yourself. So we're going to see how that works out on the logistics side of things. I think long range for tomatoes as well looks fairly well when you have like the Ukraine agrivision, right, not being able to go in and actually process tomatoes like they normally would, which is a huge market. And then you've got a lot of flooding in China right now in May and in July that have just kind of really gone through a lot of their farming areas. So you wonder how it's going to affect their tomato crop as well. So something to look for there. Strawberry has been kind of on the rise in price. Market's off about 15 to 20% as far as production goes because he's lost acreages during the wintertime with inclement weather. $17.50 for conventional, $22 for organic. So the premium's still there. And I think in the long run, things look really good for California crops this year. Prices continue to remain okay. Unless you're sweet potato guys, we'll have to see how they finish out this year, but prices aren't looking very good with them. And then one thing I can't quite understand right now is what the rice price is doing. Still holding like a $25 to $27 per bag range up north, despite the fact that we've got all these export restrictions in coming out of India, and then Thailand's not really having much of a crop year either because of last year. So I think there's going to be some upward pressure there, but we haven't seen it flow through to California yet. But all in all, it looks like California farmers are going to have a pretty good year this year as long as they get the harvest home. That's the dirty on crops. Let's get into California nut markets. Almonds continue to get downward pressure because of this projected carry-in from the objective estimate that came out. We're down to $1.58 to $1.60 for non-Perel meats, $1.80 for in-shell on non-Perels. And then your Carmel, Monterey, Butte, Fritz varieties are really kind of getting slacked. They're around the 115 to 120 range. I think the buyers are really looking for a signal at low prices to buy in to this market because they expect the crop carry in as well as the existing crop to kind of have this large overall base to sell out of this year. So we'll see where that ends up. I think things could really twist around quickly if this actual crop comes in. So it kind of, I can see the Russian roulette game that people are playing, right? Do I just hold off on selling my new crop or really staying in maybe in a call pool versus being an actual pool, hoping that number comes in lower come December, because we've got to wait quite a long time to really see what crop results are doing. But again, if crop results come in lower than that, which is shrink the carrying up quite a bit, it could signal an upward price signal, but I don't know, right? Most people don't, but I think if you look at some surveys, 60-70% of growers think that crop overall is much lighter than what that objective estimate came in, so we'll have to kind of wait and see who's right. Walnuts continue to just suffer. Prices have come up on new crop forward sales that guys have done. We'll have to see if those firm up this year. The other thing that may affect things on the walnut side has been a ton of flooding in China. And both this month as well as May, and it's really going through kind of those breadbasket areas. I don't know if that's in some of the areas where the walnuts have been producing heavily, but if they are, it's going to really affect their ability to get in there and farm those crops and also have some quality off them. So it could be a boon for us because they were projecting a pretty good crop size this year, 1.4 billion pounds, almost twice the size of ours. So, and then pistachios, not much data on those. I've got a lead on that. So coming forward the next couple of weeks, we'll actually be able to give you some up-to-date pricing data going forward. but pricing has been holding up in the mid $2 range for those. Production, from all accounts, looks to be pretty good this year, with water and weather concerns like it is. And so we'll have to, again, wait to see what that comes in. We should see some information come September on what the projected crop size for that is, and we'll report on that when it comes in. But all in all, it's kind of a mixed basket for nuts. Pistachio is good, walnuts really bad, and almonds just kind of suffering. And we'll have to. One thing to consider too on these things between the walnuts and the almond side, just like to mention, is talking to the banks like I do as a regular part of my business. I think you're going to see a lot of folks have a hard time kind of getting renewal on these crop lines this year after 2-3 years of subpar returns or losses on these crops. It's really going to put some stress on people's working capital and their ability to kind of finance the next crop coming in. So I think most of the banks I talked to are kind of bracing for that kind of pushback. And you may see kind of some non-renewals of lines of credit. So it'd be a good time to get in front of your banker, start talking early about what you expect your crop receipts to be, and really start negotiating those renewals to get them put behind you before some of the problems that they're going to have to deal with inevitably are going to take up their time. That's the stressful story for California nut markets. Let's get into interest rates. Treasuries continue to move up a little bit. Near-term treasuries, not so much. Long-term treasuries continue to push up about 10 basis points, 20 basis points here and there. You're looking at the 4.21 range for 30-year T-bills and maybe 4.06 for 10 years, while the 1 month is 5.41. So we're still in this inverted yield curve, which signals a recession coming forward. If you look at economists and take a survey of them right now, it looks like 60% of them think we're going to head into a pretty hard recession, and 40% think we aren't going to. And usually when that tips that way, they're usually pretty right. So home mortgage rates continue to push up. They're 7.4% average on a 30-year note, 6.96 for a 15-year. It's up about 10, 20 basis points. And then jumbo loans are in the 6.5 to 6.7 range for the same type of money. With these mortgage rates, they're really based on these treasury rates. Treasury rates continue to have pressure, one from the Fed, and then two from all this money leaving the market and coming back home into China and Japan as those two banks stop their 0% buying of their own bonds. I think, again, if you talk to these economists, you're going to be looking at a couple more rate rises at least this year. They're talking about it at the Federal Reserve, saying that this is pretty much going to happen. And I think the reason that's going to happen is there's two parts. One, unemployment just hasn't happened. It continues to shoot down. You're 2.2% unemployment for college graduates, 3.5% unemployment overall. You've got wage growth of 4.4%. And so as long as people are making money and having jobs, they continue to spend money, which is inflationary pressure. You've also got a ton of equity in homes. And I think the other things you've got to do if you're the Fed, or at least one of the things they may be thinking about, is how do I destroy some of that equity? Because if I don't, and then rates correct, I drop rates again and get out of a recession, I'm going to signal, hey, go refinance some money out of your house and go spend it, right? And then you get this inflationary pressure again. So you've also got that backdrop of the 1970s where they did take their foot off the gas when they were combating inflation back then, and then didn't continue with the rate rises. And what happened, they had another spike of inflation hit, and that's when we hit that 18% range. So there's a lot of stuff going on there, but a lot of it signals to another half point to a point in total of raises on the rate side with the Fed if things don't continue to correct on the other side. So it's kind of a weird time. I also don't understand why we're holding so hard on real estate values. I understand inventories are down and the cost of building a house is there, but if you look at affordability of these properties, it's just not there. In California, 65% of people that at the median income level can't afford to get qualified for a home loan, which is just crazy. It means 3 out of 10 people that are actually working in the state of California and making middle income here can buy a house. The rest just can't even play in the market. So that eventually, as you continue to raise prices, right, on this house through the interest rates, it's eventually could put continued downward pressure on these values. And I just don't see how they hold up. So I'm kind of a bear on this side. Same thing's happening with ag. I think ag's been holding on a lot this year, waiting to see what these crops come in at and at what value with the almonds and walnuts and what have you. Sweet potato ground. I think once these returns kind of come in and these crops are going to do what they're going to do, which especially the walnut side is being so bad price-wise and almonds kind of being off price-wise as well, I think you may see some real estate hit the market and maybe at a decreased price, but we'll have to see if I'm right. Again, with commodity prices like they are on the long run, you've got folks that are maybe told to, hey, I need you to liquidate some property because I can't refinance it because of the worry of cash flow coming through. That puts some downward pressure on those values, right? And you've also got areas where we've been really heavy influence, like say the Delta of California, if we're planting trees there, that's going to get pushed back as well because one, this hasn't played out, and two, the commodity price isn't there anymore. So we'll have to see what happens with both those things. But I think long-term signal for real estate in the next 6 to 12 months is kind of a downward pressure, and we'll have to see after that. But that's it for interest rates and the rest of the commodity reports. Thanks again for listening. Please like and share and send this out to folks that you may think find it useful. I'd like to continue to grow the base out and see if we can make the go of this thing. We've also got a newsletter. Please click on our website at the Ag Center and see if you'd like to sign up for that, giving you a kind of a weekly update on all the commodities that we track as far as prices go, prior week and current week rates, and then also economic items. So again, thanks again for watching, and we'll talk to you next week.